Have you ever felt overwhelmed and intimidated by the stock market? Do you wish you had a guide to help you navigate the world of investing? Well, look no further because, in this video, I will share my top 10 takeaways from the book considered the Bible of investing. But before we dive in, let me ask you a question. What would you do if I told you that you could become a successful investor? Would you believe me? Or would you dismiss it as wishful thinking? The truth is, becoming a successful investor takes work, but it's possible. All you need is the right mindset, the right knowledge, and the right strategies. And that's exactly what you'll find in The Intelligent Investor. Warren Buffett, one of the most successful investors of all time, has called it the best book on investing ever written. So, what makes The Intelligent Investor so unique? Well, it's not just a book about investing, it's a book about life. Graham teaches principles that can be applied to any area of your life, not just investing. The lessons you'll learn in this book are timeless and proven. These principles have helped countless people become successful investors and can help you too. So, without further ado, let's dive into my top 10 takeaways from The Intelligent Investor. Takeaway number 1. Invest in companies, not stocks. Graham emphasizes the importance of investing in companies rather than just buying stocks. He advises investors to look for companies with a strong financial position, a track record of profitability, and a clear strategy for growth. By investing in companies rather than just buying stocks, you'll be able to make more informed investment decisions that are based on the company's fundamentals rather than just market trends. Takeaway number 2, don't try to time the market. Graham stresses the importance of not trying to time the market. Instead, he advocates for a long-term approach to investing that focuses on the company's fundamentals. By taking a long-term approach, you'll be able to ride out market fluctuations and benefit from the company's long-term growth. Takeaway number 3, focus on value investing. Graham is known for his value investing approach, which involves looking for stocks that are undervalued by the market. By focusing on value investing, you'll find stocks trading at a discount to their intrinsic value, which can provide a margin of safety and potentially higher returns in the long run. Takeaway number 4, be patient. Investing requires patience. Graham emphasizes the importance of being patient and waiting for the right opportunities to come along. Takeaway number 5, diversify your portfolio. Diversification is key to reducing risk in your investment portfolio. Graham advises investors to diversify their portfolios across different industries and asset classes to reduce the risk of losses. By spreading your investments across different sectors and asset classes, you can minimize the impact of any one company or industry on your overall portfolio. Takeaway number 6, avoid market fads. Graham warns against investing in market fads and speculative stocks driven by hype rather than fundamentals. He advises investors to focus on companies with a proven track record of profitability and a clear strategy for growth. By exercising due diligence, you'll be able to make smart investment decisions based on the company's fundamentals. Takeaway number 7, conduct thorough research. Investing requires a thorough understanding of the companies you're investing in. Graham advises investors to conduct thorough research into the financial position, profitability, and growth prospects of the companies they're considering investing in. By conducting thorough research, you can decipher the financial health and prospects of a company, and avoid investing in companies with weak fundamentals. Takeaway number 8, embrace your temperament. Investing is not just about numbers, it's also about emotions. Graham emphasizes the importance of understanding your temperament and investing style. By understanding your temperament, you'll be able to make investment decisions aligned with your values and goals. Takeaway number 9, practice discipline. Discipline is essential to successful investing. Graham advises investors to stay disciplined and patient in their investment approach, even in market fluctuations. By being disciplined, you'll avoid making impulsive decisions based on market trends. Takeaway number 10, know when to sell. Graham believes investors should be willing to sell their investments when the company's financial position deteriorates, or the stock becomes significantly overvalued. It's important to stay disciplined and avoid holding on to investments that are no longer good long-term prospects. And there you have it, Folks, my top 10 takeaways from the intelligent investor. By following these principles, you can become a successful investor and transform your financial future. So what are you waiting for? It's time to invest intelligently.